Okay, so today we are talking about the First-Time Homebuyer Seminar. So we're going to go in detail about, first we're going to talk about the whole lending side of it, all what the costs are to buy a home, closing costs, down payment, all of that information. So let's call it the number side. So I'll put on my loan origination hat. And then for the last two sections, we'll go over the home purchase and the listing, what it takes to list and sell your house. Basically, we're going to go through a lot of home ownership advice in this seminar. It's more geared toward first-time home buying seminar, home buyers. Anybody can get a few different nuggets out of it. So we're going to talk about what you're looking for, the right mortgage deal, the right mortgage fit for more from a general overview, though not very specifics of FHA or VA conventional, nothing like that. That will be another video. So when you start looking to purchase a house, of course, everybody comes out of the woodworks and tells you nightmare stories or their overall story. So, well, again, this is just an informative, take a bunch of nuggets out of it, keep studying. There's, of course, plenty of YouTube opportunities to look at everything these days. I've got checklists below in the YouTube description. So just look down there. I've got a buyer's guide, a seller's guide, documents needed, like a checklist for the lending side. Getting a home is definitely a bit cumbersome, tedious. There's lots of moving parts between the title company, taxes, liens, the lenders, just lots of moving parts and lots of third-party appraisals, inspectors that come into the play as well. But as long as you're working with all the experts, they've all got their folks that they've kind of built a trust network with. So just keep that in mind when you're working with the experts. Well, basically, I'm here to help simplify this for you, walk you through the process, and basically hold your hand through the end of the actual purchase or the final sale of the property. So lending and buying a house is, of course, the biggest asset. Typically, for most people, is their home, and your biggest liability is your mortgage. So at this point, you're going to want to, there's lots of planning and saving involved as you start looking forward to buy or purchase a home. And like we talked about, it takes lots of educations, read up, look through everything. Thank goodness for Google these days. It's not like 30 years ago where it's like books, you just jump online, jump on your phone, and plenty of information there. So it helps you be prepared, and you can kind of do your homework before you're working with the agent. You can even look at, online at homes nowadays. I'll say though, I hear this again and again through my buyers. They're like, oh, I knew it was this house. And it's like, as an agent, I know, no, you really got to go there. You get to feel the land, driving the neighborhood, the actual, what it feels like within the home. So, you get those instincts, those feelings or vibes, or it feels like home type of thing. So as much as you're looking online and seeing pictures, really you do need to be there. I always look at, you don't want to hear what it's about. You want to more like feel what it's about. So beginning stages, you want to have prepare a checklist for a variety of, kind of like, are you looking at a house? What's your top tier desires? Kind of start from there. You are going to want to get pre-approved to see how much you can afford. In this market, 2021, it's been low inventory. And so buyers have had a tougher time for sure. But in order to put your best foot forward, you got the pre-qualification versus the pre-approval. And you want to go at this point in with the pre-approval because more of your finances have been looked at versus a pre-qual. Pre-qual is more of like, oh, hey, I make this credit score, I make this much. It's all kind of and don't get me wrong, that's not bad. It's just in this market, a seller is going to, with multiple offers on the table a lot these days, sellers going to pick the one with that they don't feel they're going to lose financing somewhere along the line and go out of escrow where they have to put their house back on the market. So pre-approval is definitely what you want to be talking to your lender about at this point. And there are several government programs for low to moderate income to talk to your lender about, depending on where you qualify for. And of course, there's always the USDA program out in the rural areas. Another reason you may want to buy is several, especially here in Wichita, Kansas. Now I'm from San Diego, so yeah, it doesn't really happen there, but monthly mortgage payments may be lower than your rent payments. And of course, you're building equity. I'm not saying it's always the right movement to buy a house for everybody. I mean, if you don't think you're going to be there long, it's more of a longer game to build some equity with the house. But again, in Wichita, Kansas, it's pretty amazing what you can afford out here. And then, of course, as equity builds, you can borrow against your home. This is what you don't really realize until you're in a home. Yes, all the wealth experts say it, but it's just, what I had rented for a long time before I bought a home. And so literally at the end of it, I had $0 saved. And at the end of, 10 years in my home, I mean, you've paid down so much. So you have that equity built up. And then, of course, appreciation's kicking in. And, of course, this year, appreciation is out the roof. So really, like everybody this year, I mean, people can start tapping into that equity, even though we did have COVID scare there. But with that, I mean, on a good note, houses appreciated. So if you owned a home, you were gaining more wealth than, again, if you were renting. So, again, there's, research that thoroughly. I mean, buying a home, and the equity that's building, paying it down over the years, developing the savings account. And then, of course, with appreciation, you're just, it's like your own built-in savings plan. So, okay, so let's talk about the pre-approval. So you need the pre-approval when you put an offer in on a house and to get an agent to start showing you homes as well. Your credit will be pulled. You will need to provide your monthly income and your monthly debt. So start gathering the stuff at this stage. It works both ways. You can either start fully ready to go, or you just jump into where you're, fully, pulling all the stuff during the transaction. But really just, with all the information that's out there these days, start gathering your documents, have your tax forms, have your W-2 and your recent pay stubs, your retirement, get all that information or what you have at least together where you can find it. Or I bookmark these days all of my, even if it's just doing it right before buying a house, I go and bookmark all of my bills and 401k and all that type of stuff, your investments. That makes it super easy to basically pull for to hand over to your lender when they're asking for it. So, I mean, yes, all the passwords you got to deal with these days. I just got that Keeper app just recently, where I paid for that Keeper app it's just nicely formatted. You can search for it. Safer than getting hacked on using a non-secure. So that's kind of, I think, when I'm bookmarking and saving everything, of course, by the next time I go and check it, I don't know the password. So, but that's a great way to just get all of your stuff, like put it in like a bills or a home loan section, to where you have all of that, insurance, everything at your hand, or where at least you can go do fairly easy, or just do it right when it's needed. So be sure to tell your loan officer what payment you desire. So that's a good starting point. They can help you kind of determine what price point of houses you can start looking at. And like I was saying before, the pre-approval demonstrates a seriousness to the agents and sellers that you are ready to buy. It definitely gives you an advantage in making an offer, which you definitely need this year in 2021, and probably going forward a little bit for a while as well. Then let's see, a pre-approval will speed up the final mortgage loan as well. And we're talking versus a pre-qualification, because some of those details have already been pulled and the lender has verification for it, where a pre-qual is all kind of just what's said, and everything needs to be verified still. Okay, so now pre-approval, it shows a complete list of your debts. As I said, the credit will be pulled, your employment information will be looked at and validated, your annual income will be looked at. Make sure you have a list of your bank and your assets that the pre-approval will be looking into. The amount of money you will put down in home. So this is a conversation you're going to want to have with the loan originator or your lender. Kind of know, because at the end, when you purchase the house, you've got your down payment that you've got to come up with, so thousands of dollars in that case. And then you've got the closing costs, again, thousands of dollars on that. So, it can go 10, 20K. I mean, with just, you can do that. And as far as down payment, you can look at 3.5% is kind of on the lower end. So just keep that in mind. And pre-approval does not mean you have been approved for a mortgage. Full approval must have you'd have to have your full application done at that point, and the underwriter will need to have reviewed it. So, but again, your pre-approval, basically, this is showing your ability to repay the loan. So that's the importance of that. And of course, the seller wants to know that before they're going to accept your offer at this point. So we've got a pre-approval to-do list. So first of all, you want to start paying down your credit balances. You do want to use an experienced real estate agent. It's just kind of like doctors, mechanics. you want to go get the one that has great experience, heard good things about them. And again, the better results you're going to get. And believe me, I don't understand it. It'd be really hard for a part-timer to do this, because I know with the market changes every year. I mean, if you don't know, what clauses and how to tweak things, I mean, you're not doing your buyer or seller a service. So, I would also suggest, finding somebody that is full-time and is doing this on a daily basis and researching the market on a daily basis. So the real, and another statement I just wanted to make is, a realtor can show you any home regardless of who lists it. So you drive by, you see somebody's sign in the yard and it's got a different company than, let's say, your buyer's agent that's showing you around. That doesn't matter. We all belong to the MLS. We can all show you any houses. Even the for sale by owners, have your agent contact them first. If you happen to find one of those that you're interested in seeing, make sure you talk to your agent and have them show it, or get the information before you go see it. And just so you know, the listing agent, the person whose name is on the sign in front of the house, represents the seller. So when you think, oh, let me call them, really you kind of want your own buyer's agent, because that agent is representing the seller. So their goal is to have the seller get as max amount of money in their pocket with the minimal repairs done, the minimal stress to them. So as a buyer's agent, you definitely want somebody fighting for you on your behalf. So, at this point, before looking for a house, you definitely want to start saving up for the closing costs as well. Now, that's separate from the down payment. You got the down payment, which that's more of a decision you make. The lowest you can go is 3%, conventional, like a first-time home buyers on conventional, or 3.5% on FHA. You can also, go to 5%, 10%, 20%. You hit 20%, you're not paying mortgage insurance later. And I'm not trying to make this a detailed explanation of all that, but you basically pick, with 3% down payment being the least amount you need to bring. Outside of VA and USDA, again, that's for a different video. But so closing costs, you're bringing to closing a down payment plus closing costs. Closing costs, I say, could be between 2 to 7%, or I like to say more about maybe 3 to 4% of the purchase price. So, buying a home definitely starts adding up. So you kind of want to know a good year, maybe plus in advance to start saving. Your lender will want to confirm what cash you have on hand to cover closing costs, like the title fees and escrow funds. So you'll be in discussions with them. The down payment also, that has to be seasoned and sourced. They basically think of all the money that you have. The lender is going to want to know where that money came from. Like, it can't just come out of thin air. Like, you can't go rob a bank and not have it be sourced. Just kidding. But, they do look to make sure it's either in your account. They call it like mattress funds. That's not good in the home buying situation. You want to be able to show it's been in your banking account for 60 days. We'll get into gift funds later on, but some programs allow you to have gift funds where somebody will gift you some for down payment, that is. Next, talk to your mortgage professional before making any changes to your financial profile. It may change your pre-approval status. And that leads us straight into what not to do. So here's anything you do can switch, while you're under contract or after you've got the pre-qualification or pre-approval letter, can change your purchasing power. So one, don't switch employers or positions. Pre-approval is based on employer and position at the time of application. If it changes, your pre-approval may change. And I had a friend that I was looking at on Facebook, and she's building a house. And I had to laugh because in there she's like, oh man, this year hasn't, it's been crazy. She's like, I quit a job while we were building a house. And of course, my lending brain goes, what? And I'm assuming it was all right. I'm not saying nobody can't do that, but like, you see that and, well, that will stop. I mean, if, again, I don't know the circumstances, but I saw that. I'm like, that's like exactly what you're not supposed to do. So don't do that. Don't incur any new debts. I mean, don't buy anything during the process of buying a house. No car, no furniture. You're fine after you close on the house. Buy what you want, but just not beforehand. Kind of keep a tight rein on your checkbook at that point. Don't incur any new debts. That can lower your purchase price. Don't buy a new car. Again, can reduce your maximum borrowing power. Thing is, never trust the seller's opinion. This is kind of more of a real estate thing, but never trust the seller's opinion on the condition of the property for renovations. Always have a professional inspection. And I'm going to second that with my real estate brain. We'll talk about that a little bit later as well. Property that needs tender love and care. So basically, we have, don't be afraid of these. Right now, with the market the way it is, houses are flying off the shelves, and especially the ones in HGTV looking, clean, well maintained, even if they're maybe a bit outdated, but just you can tell the quality of different houses you go into. But a little grandma house that's still in decent shape, or even like some type of fixer upper within your comfort zone. Lenders do have this FHA 203K mortgage. So since it is a little tougher right now to buy a house, make sure you're familiar with this, because it could allow you to include the costs of the improvement to your total mortgage. Again, tough market right now. This could help you get into a house, especially again if it's your first house. You can save the prettier ones for your second house. So, and another one: don't make any large deposits into your bank account without talking to your mortgage professional. The lender will confirm any large deposits into your account, and it's basically a money laundering law. And a lot of times what we're talking about in this case is, during tax season, if you've got a lot of money coming back and, pop into your account. So as long as you can validate and show where everything went or came from, that is in your favor. Now let's talk about credit. This is the number that represents the likelihood a person will repay a debt, hence why it's so important in the mortgage process. This person, or as a lender, am I going to trust this person's going to pay me back, and we're not going to lose our shirts on this? So it's just basically a tool that lenders use to evaluate risk. There are 3 credit bureaus that evaluate: the Equifax, Experian, and TransUnion, and will pull a merge credit report. So it pulls all 3 of them. And each bureau is a little bit different. They generate the scores based on information found in their database. And so as a lender or a loan originator, we will pick the middle score and work with that. And this slide just kind of wanted to outline, the 5 parts of what makes up a credit score. So you can always kind of keep this in the back of your mind, even down the road when you're not buying a house, but just to know what the bureaus look for. And so payment history is the biggest impact at 35%. So just make sure you're paying your debts on time and in full. This does have the greatest impact on your score. Your outstanding balance has a 30% impact. So that's basically the ratio between your outstanding balance, what you owe, and then your available credit. So again, that's another good chunk. And now a little bit lower is your credit history. Longer credit history increases the score. And the next one is the type of credit. It has a 10% impact. So basically anything, credit cards alone, is the lowest. But so if you have a mix of auto loans, credit cards, and mortgages, is more powerful than if you just had credit cards. And then lastly, a 10% impact is just the inquiries. I mean, how many times are you inquiring or shopping for new loans or credit cards in a short amount of time? Might have a reduction of your credit score, so a negative impact a little bit on that. So, and it surprises me in this day and age. I mean, I found out a relative in his 50s of mine doesn't have credit. I guess some people have that. I don't believe in banks and this and that. And I guess he was one of them. And so we were talking about possibly buying a house, and I did not know that. So again, so it's good to just start establishing credit. I mean, I always looked at credit cards as you got to pay them off and pay them back. I mean, it's just like cash. And so, but what's nice is if you have maybe like a commission job or something like that, it does help you, kind of make up the gap in between those interim times until you get paid, type of thing, which is definitely a comfort. But anyway, yeah, so start, hopefully you've been shopping for credit for a while, but definitely get this built up. Or if you're looking at buying, right, and you're seeing this and you don't have a credit built, start it, to where like in a year or 2 or something like that, and talk to a lender to find out how long that will kind of take you to build your credit. Okay, now I just mention of real estate agents. I mean, when you're looking for one, you want to, of course, find one that you're going to trust, you have some kind of rapport for, you click really well. Ask them about their track record. I mean, are they doing this full time? Or they've been doing it for a while? Everyone will have different numbers that they do. Some do, heavy volume, less, some are teams, but just if someone's been doing it for a while. I know various realtors, like some, had long-term experience. Maybe don't sell, aren't at the top level, but have just been doing it for a long time and, know everything about the lagoons, the septics, all that varying rural type of area, which, gets cumbersome after a while, where somebody else might have like tons more sales, but maybe more in like subdivisions, so, depending on what you're looking at, see what kind of property they sell. Again, I said full-time, and then, make sure that somebody is interested in working with first-time homebuyers. There's a lot more conversations and education on first-time homebuyer. Like, I kind of love working with them because it's like, you feel like you're really helping somebody out, and they're eager to learn and they want to learn, and, they're excited. It's their first time. So, but, some of the others might want more luxury or higher dollar ones. So just make sure, again, just look at, these like 5 points and, find a good real estate agent that you're comfortable with and are ready to work with, because you'll be with them for a while, shopping at all the houses and having lots of conversations. And someone that's obviously reliable and gets back to you quickly, responds to their phone, and all that stuff. Okay, let's talk about the loan application. Again, I believe in my description below, I do have a checklist that you can get below my YouTube channel. And so here's kind of what things you're going to need for income. You're going to need earnings statements. So again, start gathering these things or have them nearby. W-2 forms, recent pay stubs. If you're self-employed, you're going to want the last 2 years of tax returns and a profit and loss statement. And your lender can help share a sample of that with you and work through you with it. Additional income, if you have Social Security, overtime, bonus pay, do you have veterans benefits, and child support. So, compile all that information too. Now let's talk assets, which is a little different. Here you want your most recent 2 to 3 months statements for checking and savings, and you want all pages, even if it's blank, all pages. You want your most recent statements for stocks and investments. Again, all pages, even if it has a little line on it, or even if it's completely blank, all pages. And your most recent retirement account statements. Again, all pages. So that just kind of shows you all. I mean, it's lots of documents, and there's more than that. So just get ready to be told a lot. I need this, 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 and even if I need this, this, this. I mean, it's cumbersome. Remember my first slide where I said, it's like the non-fun part. The fun part's looking at the houses, picking out decor, and then closing. But like, just be ready, and the better it is the more you're going to get this quickly back to the lender. It's going to go smoother from a process all around, because they got a lot to do still on their end, ordering appraisals and other stuff, and putting together and following a lot of guidelines that the government has. 3 days this, 3 days this, so if you can get this to them in time, it just makes everything go smoother. Debit, a credit report will be pulled. I think this is the third time I said that. Your mortgage professional will notify you if additional documents are needed, just like I was talking about, and you will need documentations of alimony or child support payments. So just, again, get all these ready. And the property, once you are under contract with a house, you're going to want to provide a copy of the purchase contract, or the lender or the real estate agent a lot of times knows just to send this to the lender, but the lender will ask you, I need a copy of the purchase contract. Now, for some additional documents, you'll need to have a driver's license or a valid state ID, employment information for the past 2 years. I think we talked about pay stubs, but this is employment information for the past 2 years, including the contact information, 2 years of your residential street addresses, contact info if there's a landlord, a complete copy of your signed divorce decree. That comes into play a lot. Documents regarding child support if you are paying or receiving. And the gift letter, I think I mentioned this earlier, but the gift letter statement of gift funds if it is used. So again, remember, there's the down payment and the closing costs you're bringing to closing. The down payment, you are allowed to get a gift letter with some loans, to get a gift letter from a family member, which gift funds, I mean, they can fund you the entire down payment, but what it's going to say is that you are not responsible for paying them back. So if they're giving you $100,000, the document has to be provided that if they're doing gift funds, that you do not have to pay them back. And we have samples of that gift letter, but that's again for the closing costs. And then, I'm sorry, for the down payment. Closing costs is really all about your lender fees and basically all the costs that go into all the people helping you, get the lending. And then any court documents relating to bankruptcy action will be needed as well. Okay, so that kind of wraps it up for our lending portion. Let's move over to my real estate hat. So that was my lending hat. Here's my real estate. First, we're going to go over purchasing a home, and then we're going to end up with listing a home, selling a home. So for a home purchase, first, basically, when you can meet with several realtors once you finally pick one, or with several of them, you can have an introductory meeting. Once you do, they're going to set you up on an MLS search. In our case, we call it Collaboration Center here. And it's actually a really pretty website that you can bookmark, but you will get emails out when new properties are just listed or come down in price and fit your criteria of your price range. And you can, again, it's the MLS. It's the quickest way also to be notified, which is very important during 2021 with so few houses on the market. The other, like Realtor and Zillow, keep looking at those, but they get populated a little bit later. This goes straight to your email. And again, it's what the criteria you tell your agent what to set up. And I usually go with getting a price range, a location. Like I literally will tell them, hey, what streets and stuff. I always suggest though going out way farther. Doesn't mean you need to buy out farther. And now during the process of when you're showing and talking to in my case, my buyers, you might narrow it back down. If they're really intent on, no, I really want to live in this certain section, but whether some relatives live around there or they're just familiar or used to it. But a lot of times it kind of usually works the other way though. You want to go out farther because you never know what home you're going to find. Doesn't mean you have to put an offer on it. Doesn't mean you have to move there, but it kind of gives you a sense of what's out there and what you can get. So when I find that usually it works more to that advantage of the buyer. They end up picking something maybe that they hadn't thought of or hadn't told you about. So, okay, now on to showings. Basically when you're getting your emails, you're going to pick which houses you want to see. And what I usually suggest is that you sending to your agent, texting them the addresses that you want to see, because your agent then will schedule the homes. And I usually, just confirm, once they schedule the homes, you guys figure out a time and date, and then the agent gets a confirmation that the homes are scheduled, and then they can text you and say, okay, we'll meet you at, like, whether you're seeing one or three or however many, say, okay, yeah, we're set, we're confirmed on all the houses, and we'll meet at this address at 3:00. So yeah, your next step is showings, and that can last from 1 month to 6 months to a year, depending on where, the buyers are in their decision cycle or how quickly they're ready. Okay, so once you've gone down around, maybe this year you probably put in several offers. And let's get to a point where you finally submit an offer, and in that case, it's finally accepted. You negotiate it back and forth through your agent. Your offer is accepted. So this is what happens at this point. The title commitment will start. Well, first you want to submit your earnest money. About 5 days to do that. In our case, according to your contract, of a certain number of days, your agent will keep you on track. I just say, okay, next, get your earnest money in right away and schedule inspections. You might give them a list of a couple inspectors that, have, others have liked, or you can just use the phone book, pick out an inspector. Maybe somebody, talk to people, find your inspector, and then we'll schedule that with the listing agent. That gives you about 2 to 3 hours to meet your inspector out there and look through the property. They look at the roof, the mechanics, water heater, heating, and air conditioning. And they give you, and afterwards they kind of do a recap at the inspection, and then they'll schedule, either send you that night or the next night. I always like when they take some time to actually write the report. I'm not into the inspections that gives you a report right then and there, because they just haven't done their due diligence to think through it and write it down. So, so you schedule your inspections and you submit your earnest money. With COVID, we kind of changed the way we started doing a lot of online payments through ACH. Used to would be checks, but now it's just through online. So what I'll do with my clients is I actually just make it easy for them. And Security First Title is someone we use a lot here. I go straight to their website and send the link to my buyer, and basically it's secure to where, like, they've got to send input, I think, a username and password, and then they get an email to their email before they can even do anything. So very secure. And again, I do that just to make, I just try to make it as easy for the buyer as possible. They're doing a lot of information gathering with the lending already. So, okay. So, and then again, like I was saying, the title commitment search begins at that point. Okay. Next, we've got the repair request negotiations. Your agent will, once you figure out from your inspector, and you and your client, the buyer and the agent, basically go over what came up, what issues. And your agent will kind of say, well, give you some guidance, and then you'll see what's important to you. And, basically your agent will write up and put a copy of the inspection report when they submit that to the listing agent. So you're back to negotiations at this point. So you submit that, you have a certain amount of days where you have to submit that. It's just according to your contract. Again, your agent will keep you on task. And so let's say you sent it back there, you might have a couple changes, negotiate to see, hey, sellers will do this, they won't do this, they'll do all of them, they'll do none of them. Believe me, it's the gamut. I couldn't even tell you, couldn't even guess which ones they'll do and don't do. It's just interesting. It's based on personality sometimes. And, and of course, did you give them a high offer? Did you give them a lower offer? I mean, what's the condition of the property? Anyways, but negotiations. So after you get to that point, and let's say you've passed that point, everyone's agreed upon it, you're waiting for the appraisal. So it does have to appraise. If it doesn't appraise, you're back to more negotiations. I usually say the seller, you kind of want to, kind of fix that part. But again, according to the contract, it's back to negotiation. So if there's any issues with that, you negotiate. Let's say if it doesn't get negotiated on either this or the repair request, you fall out of contract and you move on. But let's pretend like you're now past this agreement. You are ready to head on to closing. So right before closing, I usually kind of prepping the buyers at that point. You want to kind of get your moving all settled. Your moving trucks. Start packing. You're going to want to change the utilities in your name on closing day. Both the buyers and the sellers will just say, hey, we're closing on this day. Can we get our, call a couple utilities and electric, gas, water, get your trash started, on that stuff. But, and right before closing, you will get a settlement statement. So that lists, title sends that out, all your financials. So you just review, it's got your lender fees on the buyer side, and your agent looks over that quickly. They'll send it to you for review. And then at the very bottom, it says due from borrower. And that is the cashier's check or the wire that you're going to want to prepare for that amount of money. And then really at that point, the buyers do a final walkthrough. Usually I suggest the night before, because if there's any issues, you either want to back off a closing. I mean, typically 9 times out of 10 or 10 times, it works through. But there's situations where you may want to hold, they didn't fix something. You want to, hold back closing a little bit for that, or do a monetary negotiation as well. So, but the final walkthrough is where you get to check out what repairs you asked for. Are they done? Did you get the receipts on them? And let's say everything goes good, then you're set for closing the next day. And at that point, everyone shows up at closing. Buyers go through first. Takes a while if there's a lender. Sellers come a little bit later these days after COVID. They started having them come in about 20 minutes later. And buyers are in there for a while, sign everything. Then the sellers are pulled in for a little bit, sign a few pieces of paper. Then the title agent usually goes, makes copies while both parties get together. And it's a little different with COVID. Maybe they don't always get together, but to an extent, just to kind of exchange pleasantries, exchange keys, garage, ask them more information about the house. But there you go. It's closed. Then you celebrate or get moving. Okay, so with that, let's go to the listing a home. Okay, so first, again, you can talk to some different real estate agents, see which ones you want to work with. Meet with the realtor or realtors. They walk through the home. They, everyone does it a little bit differently, I'll admit. I bring some initial comparables on the property, what I know. Remember, I haven't been through the home yet, so I don't know what condition it's in. So I bring some initial ones, and I'm constantly going and checking out along the line, checking the price, just to, because, sellers that you want to get the highest maximum dollars for your property. And so you determine a list price, list date, and you sign all the listing documents at this point. And let's go over the documents that are collected at this point and prepared. So the seller will want to prepare a seller's property disclosure. In my case, it's a 7-page document. It tells you what the age of the water heater, the heating and air conditioning, the roof. And a lot of times people do not know the ages, by the way, so don't expect them to always be in there. In fact, you want to put less than more, because this does become part of the contract. You can be held liable if you say something inaccurate. I had somebody once say they just had the water heater changed, and they said it was a 60-gallon, and I was like, "Are you sure it's a 60-gallon?" And funny enough, he sent me the invoice, since it was so recent, a receipt. And I noticed quickly it was a 40-gallon. So again, being an agent, you catch that. They're not going to know, because you've had past experience with other stuff that had issues. So you know what to look for, and you're like, quickly, I got that quickly changed. And then I told them I just did it on my own. But then also what transfers to the buyer. So like the refrigerator, the washer and dryer, there's a page on that. Some security stuff, some fencing, who owns what fencing sections. So it's 7 pages of, telling the buyer everything a buyer, put yourself in the buyer's shoes, everything that you would want to know within reason, without divulging something that's inaccurate. The seller signed the taxes, because buyers have to put that in with the offer. Make sure that their buyers are looking at the taxes, so you know how much taxes are due, and it has other specials on there. It lists some square footage and bedrooms and baths and stuff. It's not always completely accurate, but it's really just a guideline. Mostly accurate, but sometimes not completely. Lead-based paint, if your house is older than 1978, a lead-based paint document is required to be signed by all parties. Then the agent also, we get professional pictures taken of the property most of the times when it's going to be listing, and those are the pictures that go in the MLS. And as well, we collect the measurements in the home features. We take a laser and go to each room, measure those out. We get the flooring. We want to know the flooring and the dimensions. And that goes in the MLS, as well as the home features. And what I mean by that is, what kind of siding, is there granite, bathroom on the main floor, lower floor, all again, just so you can see it on the MLS, all the details that are known. So you know that before going to it. There might be some specifics that you want. Oh, I want our little babies up top versus downstairs, stuff like that. The agent will, based on the information that was collected, will write the remarks and upload these documents that we just talked about into the MLS. And so it's an easy access when a buyer's agent wants to put the offer, and they can collect that, have their buyer sign it and then submit it with the offer. And then once the listing date comes up, we activate the listing, and then we start to market the property. And so your agent will, like in our case, I'm with Berkshire Hathaway. Our company has a variety of channels, such as the websites, Instagram, YouTube, and then AdWorks is a nice thing where it's just extra exposure, extra advertising that goes out to all the social media when a listing is activated. And then, like in my case, I have my own separate personal channels that I, gaining followers on. So I have a YouTube channel. In fact, in my channel, a lot of people don't have YouTube. So I do actually listing videos. But Instagram, Twitter, Pinterest, and Facebook are other vehicles, again, just to market the property out like crazy, get everyone, everyone's online these days, to get everybody aware that your property, the more eyeballs that see it, the more interest it's going to create, multiple offers, hopefully. So again, that's the marketing begins once the house is activated in the MLS. And when I was talking about earlier from the buyers, when that collaboration center is put together, the MLS will hit any buyer looking within that price range and in that location. And of course, it's also then they get populated to third parties like Realtor.com, Zillow, and a bunch of others. So, and then also for a listing, you're going to have open houses. And a lot didn't happen in 2021 just due to the low inventory, and, houses were getting sold very quickly. And then the next thing is, okay, so somebody is interested in a house, they send you an offer. Now, I will tell you that I get asked this a lot, is you can accept the offer, reject it, or counter. So just remember, if you're selling your house, you can accept it, reject it, or counter. So if you don't like it, typically you're countering, but if it's just really ridiculous, you just reject it. So let's say we got to, okay, we finally, whether it's multiple offers or whatnot, we got to a point where we accepted an offer. At this point, again, like with the buying, earnest money gets turned in and inspection scheduled. That's the next thing you want to know. During inspections, the seller is going to need to leave for 2 to 3 hours. Just like with the showings, the seller does need to leave. They will, accept or showing times. Usually it's via text. They automatically get noted by the showing time service. But the inspections are the same thing. So once inspection rolls around, it's about 2 to 3 hours. The buyer gets that time with their inspector to kind of, I always say, bond with the property again, as well as get all the inspections looked at. So after that, again, we're at the negotiate repair section. The buyers will put together and send you, the seller, a list of repairs. You can look at them, do all of them, none of them, or, again, it's just a negotiation. How badly do you want to keep this offer going? Or, is it, you want to play hardball? I mean, totally up to the seller at this point. And after that, let's say you've negotiated and you got past that point, you want to clear any title issues that come up, whether it's divorce decrees, stuff that needs to be paid off, liens, whatnot. And again, if we get all the way to closing, we're past that, we're past the appraisal. Again, the seller will look at their settlement statement. Usually the agent will have put together a net seller's document when you listed it, and then for each offer that came in. So you're just reviewing the settlement statement against the net seller's information and just making sure all the numbers look accurate. And that shows you what your profit is, what you're going to make at closing after the payoff is done. A lot of times if there's a payoff still be done, you'll be filling out a form for that as well and submitting that to title. So when they're doing the number calculation, crunching for the settlement statement, they'll know to pay off that. In fact, I was just at a closing yesterday where somehow they didn't take that into consideration, the payoff. They had the paperwork and everything, but it wasn't on. So they actually had to go back and reprint some stuff on the settlement statement. Again, that's why we go over this stuff. And me as the agent, I had already sent this payoff in. But luckily it was caught at that point. And then seller will prepare to stop utilities on that day, on closing day. And again, prepare the movers, make sure you get all your stuff boxed up, packed up, and hopefully you're doing that during the duration of the the couple weeks leading up to closing. So then at this point, the seller moves out before closing, moves out, cleans the home, and then you go to closing day where you're handing over the keys, garage, and all that stuff. So, and there you are, closing day. And again, like I was saying earlier, buyers sign first, sellers arrive a little bit later, and buyers that have a lender versus cash only. Cash goes very quickly, but if you have a lender, it does take a while to sign a bunch of paperwork, and then the sellers, are in there for not that long, selling only so much paperwork. Then again, you meet with the other parties, possibly at the end. You exchange the keys, garage doors, a little chit chat, ask anything about the house and neighborhood, and there you are. Congratulations, you've closed. So you celebrate. So anyways, this wraps up First-Time Home Buying Seminar. I hope you got a lot of information out of this. Again, in the description below, I've got the buyer's guide, the seller's guide, the mortgage checklist, the documents, that you need to bring to apply for a loan. And I think there's another mortgage document as well. So, and I just want to kind of wrap this up with saying that if anybody's interested in me coming in person and having a, whether it's a high school class, a college class, Rotary, any type of groups, fireman's club, police, I'm more than happy to come and present both from the loan origination lending side and the real estate side, and just kind of help out, talk to a group of people about what it takes to buy a house. So just reach out anytime. And with that, here's my contact information. On the one side, I got the Nexa mortgage, and then on the other side, I do have the real estate information. So thank you so much for sharing this video and watching it with me. And I just realized I did the whole thing showing all the tabs on the side, but oh well, you get the gist. So thanks again, and reach out anytime. Karen Wright, Berkshire Hathaway Home Services, Wichita, Kansas, and also Karen Wright with Nexa Mortgage loan origination, which, by the way, I do shop 140 lenders to find the best mortgage fit for clients. So have a great day.